Hello, good morning, and thank you very much for coming to this webinar all about back to basics. And we're going to look at some basic accounting terminology today and see how that fits with the everyday bookkeeping that you do on FreeAgent. See what happens under the hood when, for instance, you create an invoice, create a bill, create an expense, explain a bank transaction, and so on and so forth. I'm going to show you what's happening under the hood and explain some basic accounting terminology to you. My name's Emily Coltman. I'm FreeAgent's chief accountant. I'm a qualified chartered accountant, but I promise I speak fluent plain English. I will be explaining the accounting terminology in plain English and trying to demystify it as much as I possibly can. Just a couple of housekeeping points here today. Because there's so many of you here today, it's great to have you all here. I won't be able to take questions from the audience. If you do have any queries along the lines of whether you can claim particular costs in your business or how to file a tax return, we have got some really helpful guides here on our website. So that's go to freeagent.com/guides. You can also find these under resources and guides for running your business on our website. You'll also notice we've got here an accounting glossary, which I've opened here. This is again where I've tried to explain accounting and business finance terms in plain English as far as possible with the help of my amazing colleagues in our communications team. So if there is a term that you wonder what it is and you don't hear me explain it today, head to freeagent.com/glossary and hopefully you'll find it there. Now, back to my FreeAgent account, and I'm going to, as I said, explain things like an invoice, a bill, and an expense, and what they actually do in your accounts. So the first question we must ask ourselves is, what actually is an invoice? It's a document that you give your customer to ask them to pay you some money, to detail the goods that you have or are going to provide, or the service that you are going to or have already delivered for them, and ask them to make you a payment. So if I were to very quickly create a new invoice in FreeAgent, I'm going to date that at the beginning of December 2023, make it a really quick creation, and I'm going to literally just add an invoice item for a week's retainer for, yes, let's make it a bookkeeping retainer, why not, for £1,000, create and finish. And there is my invoice set up and ready. At the moment, FreeAgent won't have done anything with that from an accounting point of view because it's in draft. That means it's not yet ready to be sent. So we don't want it to do anything in our accounts. How we can see whether it has done anything in our accounts is to go to Accounting and Reports in FreeAgent and go to this really handy report here called Show Transactions, which is basically a list of all the transactions in all the different categories in your accounts. So suppose I were to say that I want to see the sales category. That invoice I created there, invoice 002, there's no sign of it because, as I say, that invoice is in draft. If I were to mark that invoice as sent, or once I've actually sent it to my customer, so if I do mark as sent, go back to my show transactions, and I'm going to refresh my screen, watch what happens just about here. That invoice appears in my sales. What that's done is to increase the amount of sales my business has made. And in accounting terms, what I'm saying by that is I have earned some income. I have earned some income. So you'll notice here I've got a sales category. A sales category is an income category, and there are various different types of categories that you'll find when you look at your accounts. You see here I've also got some other categories. I've got categories for costs of sales, stationery, and accountancy fees. Those are what I like to call cost categories. They're your business's day-to-day running costs. So let's, as an example, go to stationery. I've got some payments there that I've made to Staples. Those are, as I say, day-to-day running costs of my business. I might also have what's called assets. Assets are what the business owns. So suppose I now go to trade debtors. Well, there's a piece of accounting terminology for you right there. Trade debtors just means unpaid invoices. Money that my customers owe to me because I've done some work for them, or I'm going to do some work for them, or I've supplied them with some goods. You'll notice there I've got a balance on that account for the value of that invoice that I just created, invoice number 2. I'm going to show you in a few more minutes exactly what it means that I've got that in trade debtors as well as in sales. I'm going to explain that in more detail. So you might have, as I say, assets. You might also have liabilities like this one here, trade creditors. Trade creditors simply means unpaid bills. You might also hear it called accounts payable or purchase ledger control account. Trade debtors, your unpaid invoices, you might also hear called accounts receivable or sales ledger control account. All mean the same thing. Trade debtors means unpaid invoices. Trade creditors means unpaid bills, money that you owe to your suppliers for goods and services they have or are going to provide you with. In this case, I've got some money I owe to my accountant. So what does all this mean? What's all these debits and credits? What am I talking about when I say that that invoice appears in both sales and trade debtors? What we have here is a system that's called double entry bookkeeping, which dates back to the 1400s and to a certain monk called Luca Pacioli in Italy. Luca Pacioli drew up a system that said, when you record a transaction in a set of business books, it's always going to appear in at least 2 different places. There's always going to be equal and opposite debit and credit entries for every transaction. Now, I think that was accountantese and I need to translate it. So this invoice that we looked at, invoice number 2, we said that we've earned some income. Sales is an income category. In order to increase the value that's in an income category, you can see here that I've made £3,250 worth of sales. Suppose I make that invoice draft again, I would expect that line to disappear and the balance to drop by £1,000, and there it just did. If I go back to the invoice and I mark it as sent, then it will appear here and it will increase the value of my sales by £1,000. There we go. So what it's done there is to credit the income category. A credit represents an increase in an income category. And the rules of double entry bookkeeping say that every credit must have an equal and opposite debit. Otherwise, basically, it would be fundamentally wrong. The way double entry bookkeeping works is that every transaction must have equal and opposite amounts of debit and credit. And when I say transaction, I mean something like a sales invoice or a bill or a bank payment. They're all transactions. So what I've got there is I've got invoice number 2, and you'll notice that this time I've debited the account instead of crediting it. I've debited my trade debtors account. And what I'm saying there is I'm increasing the amount of money that my customers owe me. An increase in an asset, and remember I mentioned trade debtors are an asset, an increase in an asset is represented by a debit. Now, I know that sounds weird. Why does it sound weird? Because we're used to thinking of our bank statements. We're used to seeing a bank statement saying money in, credit, money out, debit. What the bank's actually doing when it produces our statements is thinking of it from their point of view. As far as the bank's concerned, if you put some more cash into your bank account, that's not their money. You're not giving it to them. You're just asking them to keep it safe for you until such time as you come and ask for it back. That means that they actually owe you more money. In double entry bookkeeping terms, just as an increase in an asset is a debit, an increase in a liability is a credit. See here, my trade creditors account, that's a liability. Posting a bill, I've credited my trade debtors account. I've increased the amount of money I owe. That's what the bank's saying when they put that money in is a credit on your bank statement. Similarly, money out, when you take money out of your bank account, that reduces the amount that the bank owes back to you if you were to come and close your bank account. Suppose you had £1,000 in your bank account, you took out 100, you then went and closed your bank account, the bank has to give you back £900, not 1,000, 900, because you've already taken £100 out. Therefore, by reducing the amount that's in your bank account, you have reduced the bank's liability to you. And in accounting, double entry bookkeeping terms, that is a debit. So that is why on your bank statement, it says money in credits, money out debits, the opposite way to how we think about it from a double entry point of view. So there we go. You've seen what an invoice does when we've marked it as sent or when we've sent it. You've seen that it increases the sales and also increases the amount that our customers owe us. Now watch what happens if I pay that invoice. I could add a manual bank transaction, but actually in my FreeAgent bank account, I've got a transaction to pay this invoice off. I've got an unexplained transaction. That is the payment for this invoice. If I click on it, FreeAgent allocates it to the invoice as you'd expect it would do. So I'm going to explain my bank transaction. You'll see it's gone green, as transactions always do in FreeAgent when you've explained them. I'm going to go back to my show transactions. So I'm in my sales account. If I refresh this, I actually don't expect that to change. Watch what happens. Nothing. That is because when I receive payment for the invoice, I don't want to count that income again. I've already said I've earned that income when I recorded the invoice. So I don't want to record that income again when I actually get the money from my customer. That's why it is so important in FreeAgent to explain an invoice receipt as an invoice receipt. If you explain a transaction for money coming in, which is to pay an invoice, if you explain it as sales, like these, which don't have invoices, if you explain that as sales, FreeAgent's actually going to double count the income because it's thinking that you're saying there's no invoice for that. I haven't already recorded the income, so I need to do it with the bank payment. That is why it's so important when you explain a receipt from a customer against an invoice to explain it as an invoice receipt. See what happens though now if I go to my trade debtors account. You'll see I've got an invoice receipt against invoice 2, which I didn't have before. And my trade debtors account now has a nil balance on it. That's because I issued the invoice and got some money for it. I issued another invoice and got some money for it. So what I'm saying is I'm reducing the amount of money that I'm recording as this is what my customers owe me because my customer doesn't owe me that money anymore. I've got it. So in other words, I'm reducing the value of that asset. The opposite side of that entry is going to be here, my bank account. So you see there, I've got an invoice receipt against invoice number 2 for £1,000. See there that it's a debit. Equal and opposite entry for what got posted to trade debtors. We credited trade debtors because we're saying we're reducing the value of what our customers owe us. We're also debiting our bank account. We must have an equal and opposite debit for a credit entry. That's how the rules of double entry work. And we're saying the debit, we're going to debit the bank account because remember, a debit is an increase in an asset. Bank account is an asset. That's something the business owns. The money in the bank account is what the business is part of what the business owns. So we've got our hands on some cold hard cash. Our customers paid us. The value in our bank account has just gone up. The amount that we've got in our bank account has gone up. So we have debited the bank account. Let's now see what happens with some cost transactions. So I've got a bill here that I've already posted. A bill, as I said before, is a purchase invoice, supplier invoice, accounts payable. You might call it a number of different things. This is some accountant's fees. If I go back to my show transactions, I can show you how that's appearing. And it's in 2023. It's a bill from my accountant. What I've done there is I have debited this account, which is a day-to-day running cost. You'll see what I mean by day-to-day running costs just shortly when I show you the profit and loss account. So we've debited our day-to-day running cost. We've said we've incurred that cost. Our accountant has done a service for us. We have incurred that cost. The opposite entry to that, as we've seen before, is trade creditors. We owe some money to our accountant. When that bill gets settled, if I go back to my bank account and go back to all time periods for my transactions, there's a payment. FreeAgent has guessed that it belongs in cost of sales. This one actually doesn't. So I'm not just going to approve and save the changes that FreeAgent suggested for me. I'm going to say this is a bill payment, and I'm going to say it's a payment for that bill there. Save changes. Transaction goes green. What happens when I go back to my show transactions? Now, I'm expecting that my accountancy fees won't have changed because I already recorded that cost when I recorded the bill. And as I expected, no change. If I go to trade creditors, what I'm expecting to see is a debit entry to trade creditors for my bill payment. Bingo. What that is saying is it's reducing the value of that liability. That was a liability. That was money that I owed to my accountant. I've paid them. That liability does not exist anymore. I'm saying I don't owe that money to my accountant anymore. I've paid them. So that is why I am reducing the liability and doing it with a debit entry. The opposite side of that entry, it's going to be my bank account. There it is. What I'm saying there is I want to reduce the amount that's in my bank account. I've got less money in my bank account now than I did have before, because I've now paid my accountant. One thing to note is that transaction only came in when it was explained. If the transaction was either guessed or explained for certain, hang on, I'll just refresh my screen because I've explained that transaction now. There we are. If a transaction is in purple, orange, or green on your banking area, then it'll show in here under show transactions. If it's red, it won't. If it's red, that's because the transaction is unexplained. In other words, FreeAgent knows one side of the double entry, but not the other. It knows, for instance, that this is going to be a credit entry to the bank account because it's money leaving the bank account. So it's going credit bank, debit, what? I don't know. So it can't post that into show transactions. So see, that transaction there for £100 dated on the 17th of December, it's missing. That is because FreeAgent doesn't know where the opposite side of it will go, and it can't just post the credit side. It's got to post the debit as well. Otherwise, we're just making a fundamental mistake in bookkeeping terms. We might as well say 2 + 2 = 19. It is fundamentally wrong not to have equal and opposite debits and credits. That's why, as I say, an unexplained transaction will not appear under show transactions in your accounts. One final transaction I want to show you is an out-of-pocket expense. So here we have some money that I've spent on a hotel bill. An out-of-pocket expense under My Money Expenses, this is money that you've paid out of your own back pocket or one of your employees has on a business cost. You've spent it on something for the business. So I've spent some of my own money on a hotel bill. So there we are. It's a payment for accommodation and meals in April 2024 for £84. It's a business cost. Back to show transactions, and that's actually in the current accounting year, and accommodation and meals. Debit entry, again, like the accountant's bill, because we are increasing a day-to-day running cost. The credit side hasn't gone to trade creditors or the bank account, it's gone to my expense account. What that means is it's money the business owes me. I've spent my money on a cost for the business. The business owes that money back to me. You might find that when you contact the FreeAgent support team and ask how you should post a cost to the business, or perhaps the purchase of a new asset, should it be a bill? Should it go under My Money Expenses? Or can you simply explain it as a bank transaction? If I just quickly hop back to the banking screen. So like some of these transactions that have been posted for approval. So this here, we have just literally a bank payment for stationery. Why does it matter whether you post a cost or the purchase of a new asset as a bill, a bank payment, or an out-of-pocket expense? The answer lies in the double entry. If you post something to out-of-pocket expenses, if you post a cost under My Money expenses, the credit side of the entry will go here to account number 901, the expense account. If you post something as a bank payment, you're going to go debit cost, credit, bank. If you post something as a bill, then FreeAgent is going to say debit cost, credit, trade creditors, and have that liability sitting ready to pay when you explain a payment as a bill payment from the bank account. That is why in accounting terms, it's important to distinguish where you're posting those three costs, because the credit entry goes to different places. So in accounting terms, right enough. In business terms, why is it important to keep those separate? Because you need to know who's paid for the cost and when. A bill is for a cost that the business is going to pay for at some point in the future. No money's changed hands for it yet. The business is going to pay for it in the future, but nobody's yet paid for it. So you need to record it as a liability and show it as going to be paid in the future. A bank payment, you want to say credit bank because you have already paid for that cost. The business has paid for that cost. You want to be reducing the amount in your bank account at the point the money left the bank. So that's why you explain that as a bank payment, to show that it was paid for by the business straight away. And as for an out-of-pocket expense, we're crediting the expense account. What we're saying there is the business owes some money to one of its staff. The actual cost has already been paid for. The staff members paid it. That's the difference between a bill and an out-of-pocket expense. An out-of-pocket expense, the supplier's not going to ask for any more money. They've had it. This particular hotel proprietor won't ask for any more money. They've been paid. But the member of staff hasn't been paid. The business still owes that money back to the member of staff. That's why it's important to record it under My Money expenses. And then for when the staff member's paid off, you explain that payment as an expense payment. You do it as money paid to user and expense payment, like so. So that is why it's important to put your costs in the right places, bills, expenses, or bank payments. That's why it's important to make sure you allocate your bank transactions correctly. Post your invoice receipts as invoice receipts and your bill payments as bill payments. Otherwise, FreeAgent can't know the accurate double entry bookkeeping. It'll post figures in the wrong places. It'll potentially double count costs, and it'll potentially mean that you pay the wrong amount of tax. Because FreeAgent is a brilliant piece of kit, but it is a piece of kit. It doesn't have a brain. It needs you to tell it where transactions should go. And you do that by posting your invoices, bills, and expenses correctly and explaining your bank transactions correctly. What I'd quickly like to show you just before we wrap up is a couple of useful reports that you might want to have a look at. So I've gone to accounting reports and I've pulled up my profit and loss account, and I want to see it for last year. See there as well, FreeAgent's warning me that I've got an unexplained bank transaction. Why is it doing that? Because, as I said before, if you have unexplained bank transactions, FreeAgent only knows one side of them, so it can't actually put them into your accounts, into your reports that you're looking at here. So by telling me I've got unexplained bank transactions, it's telling me I might have missing sales or missing costs in my profit and loss account. So this profit and loss account, or P&L for short, what it does is it adds up for a given period of time your business's income less its day-to-day running costs. So see there, we've got some stationery and we've got some accounting fees. So what we can see here is that for this particular year, we've made a profit of just over £3,000. A business has made a profit if its income exceeds its day-to-day running costs. It's made a loss if its costs exceed its income. So a profit is what the business or the business owner will pay tax on. If it's a limited company, it'll pay corporation tax. If it's a sole trader or partnership, the business owner or owners will pay income tax and national insurance on the profits. But you start to see now why it's so important to get your income and your day-to-day running costs in the right places, because they're what drives the amount of tax you pay. You can also see by looking at your P&L things like, what costs has my business incurred? How high is my profit compared to my sales? How much for each pound of sales am I keeping as profit? If you divide your profit by your sales, you'll get a figure that's called margin. And what that shows you is, as I say, how much profit you're keeping for every pound of sales you're making. Useful as well to use the comparative report to compare 2 years worth of P&L side by side, to say, for instance, I made £5,000 worth of sales last year. I've made £10,000 worth of sales this year. Jolly good show. My business is growing. Or you might want to assess different costs against each other. You might want to say, for instance, I spent £6,000 last year. I've spent £4,000 this year. My costs have fallen. Is that good news? Or have I put a cost in the wrong place? Have I forgotten to put a cost in? Have I put a cost as an asset instead of a cost? Have I put, for example, a new computer in as if it were a cost last year when it actually should have been a new asset? Those are all questions you can ask yourself when you look at your P&L, but they also exemplify why it's so important to get your figures in the right places. The last report I want to show you is this one here, which is called a balance sheet. A balance sheet is a snapshot as at a given point in time of how much your business owns and how much it owes, your assets and your liabilities. You can see here that as at this particular date, this business has got £3,000 in the bank and has got the same amount of what we call retained profit, which is the amount of profit the business has made and kept over time. These two figures must always be the same. If they're not, then something's gone fundamentally wrong with the bookkeeping. But what the balance sheet can show you, and if I'm going to just pull it up as at, let's say, the end of December 2023. And let's maybe try something a bit different. Let's go for it. See, we've actually got nothing in there as at that date. So I'll hop back here. And I think if I choose the 1st of December, what I'm trying to make sure I show you is a balance sheet that's got some, there we go. I wanted some more assets and liabilities. So what I've got there is I've got some money owed by my customers. I've got a small balance in my bank account. I've got a liability I owe to my suppliers, and they're, again, balancing each other out. So the balance sheet is giving me some useful information. It's saying my customers owe me this money. I owe my suppliers this money. It's useful then to refer back to your aged debtors and aged creditors reports. If I were to refer back to my aged debtors and say I want to see that as at the 1st of December, I'm seeing that as at the 1st of December, I had that one unpaid invoice and it was due for payment within the next month. That looks quite good. What I don't want to see is a whole list of invoices that are still showing as due for payment when they're over 3 months old, over 2 months old, because that could mean that I've got cash flow problems coming up. That could mean that I've invoiced my customers and they haven't paid me and they haven't paid me and I'm still waiting and still waiting and still waiting. Not good news, because I can't pay my supplier bills with IOUs. I want to see that money in my bank account, not in my trade debtors account. So you can use those reports for some really useful information about managing your business. If I've also got a list of invoices showing as unpaid from days and days ago, that might also be because I haven't explained my invoice receipts as invoice receipts. Remember, I've got to do that to make my figures pull through accurately. Otherwise, it will look as if my customers haven't paid me if I haven't explained them as invoice receipts. Again, that's because of double entry. Because explaining as an invoice receipt will go debit bank, credit trade debtors, clear invoice, show it as paid. If I were to post that transaction as sales, that would just go debit bank, credit sales. We don't want that because we've already accounted for the sales when we create an invoice. So as you can see, it all goes back to the grassroots day-to-day bookkeeping transactions as you post them. It all ripples through from there to the reports. I'll just tell you a couple of things about how to get help using FreeAgent. When you're in your account, if you click the help button there, you'll be connected to our friendly robot, Ruby. She will do her best to answer your question by serving up articles from our knowledge base. If what Ruby gives you can't help, then Ruby can connect you to one of her human colleagues. We have a fantastic support team who are all fully trained in translating accounting speak into fluent plain English. Some of them are qualified accountants, some of them are bookkeepers who've run their own business. We've got lots and lots of helpful staff ready to help you. They can give you guidance on how to use your FreeAgent account. They can't take the place of an accountant. So if you're not sure about, for instance, how much tax you can save on certain costs, or whether you should treat something as a cost or a purchase of a new piece of equipment, that's when you'd need to speak to your accountant. Hopefully that webinar has been useful and helpful. Thank you very much for taking the time to come this morning. Thank you very much and have a good day.